Well, let's get across the market open. David Lane joining us from Focus Partners Australia. David, welcome to Wednesday. A very impressive session on Wall Street overnight, led by tech stocks. Also, overall sentiment boosted by more positive news out of the Middle East that potentially the Strait of Hormuz is going to be reopened.
Yes, that's right, Andrew. It was a very strong night overnight. As you said, a bit of optimism about the potential of another deal being reached and the Strait of Hormuz being open. So we saw the oil price fell quite a bit, so down around that $79 US amount. But yeah, it was all about the tech stocks. We saw a very, very strong rally in the tech sector, about 4.1% surge in that sector overnight, led by a number of results that came through. We saw results from Palantir and Caterpillar were very strong results. Palantir led the semiconductors, and they were up by about 29.5%, which was an extraordinary jump overnight. And then we also saw technology up 17.4% and Marvel Technology up 12.8%. So a lot of positivity there on that tech sector. And then aftermarket, we saw SpaceX report as well.
I'll get to that in just a moment. David, how do you explain such extreme moves that we're seeing on the market at the moment?
Yeah, well, it's interesting, Andrew. There's been a lot of talk for a long time that the US market has been overvalued and that it's all been about that AI trade and the fact that that the AI stocks are leading the market. But what we've actually seen in the last few weeks is that the earnings reports that those companies have come out with have actually been very, very impressive. Last week we saw Microsoft and Amazon, as I said, today Palantir and a number of other companies. So what we're actually seeing is not just the fact that their share prices are high, but their earnings are actually very, very strong. Their revenues are going extremely strongly as well. So yeah, we're actually seeing a bit of confirmation that the AI trade is continuing and that the investment in AI will continue for a number of years.
Yeah, you mentioned SpaceX, its first results since listing, of course. Initially, the stock rallying, but actually finishing low, of course, has been under recent pressure.
Yes, that's right. The share price was stronger during the normal day of trading, but then they reported aftermarket, and we saw the share price off about 5% in aftermarket trading. SpaceX announced their first result as a listed company. Revenue was very, very strong. Their revenue was up 92% for the quarter, but they did also announce a loss of 541 million US dollars for the quarter. So they're certainly still a significant loss-making business. The other interesting thing that SpaceX announced is that they have invested $18.37 billion into AI infrastructure. So again, continuing that theme of those big companies investing significant dollars into AI infrastructure. But yes, it'll be interesting to see what the market reaction is once the shares reopen for normal trade. And then later on in the week on Thursday, we've actually got some of the initial founders and initial investors in SpaceX. Some of those escrows come off, so we could see a bit of weakness further in the SpaceX price this week.
So, David, to the local market then, given that strength we've seen in tech, particularly on Wall Street, how does that set us up locally?
Yeah, quite well, Andrew. We actually saw yesterday our market was quite strong, and that was led mainly by the banks, but also the tech stocks. So we did see companies like WiseTech and Life360 rally fairly strongly. So yeah, continuing on from yesterday, I think it'll be a relatively positive day for tech stocks in general, but across the board, I think the industrial stocks should do relatively well here in Australia, following the leads overnight.
You mentioned tech. Similarly with healthcare, we know those sectors have been under pressure here locally. Do you see perhaps market opportunities there as far as what investors are doing with those, given they've been beaten down so far?
Yeah, I think we've actually seen a little bit of a trend towards those stocks over the last few weeks. That last week, both the technology and the healthcare sectors were very strong. As you said, over the last 12 months, they've been laggards. So I think a lot of investors are looking at those sectors as offering some opportunity, and obviously the the renewed fervor for tech stocks in the US is helping those stocks here. So I think, yeah, there are some companies that are looking attractive from a valuation point of view that have been sold down quite a bit and now starting to get a little bit of favour from investors.
Just in terms of the banks, David, in fact, I think we've got 3 of the 4 reporting next week. What are your expectations for those results, given the backdrop at the moment we're seeing, particularly with property, and we know how critical that is, particularly as far as their mortgage business is concerned?
Yeah, well, margins are fairly skinny for the banks at the moment, and yeah, we saw yesterday Macquarie traded very well, and the other banks have been trading back up at quite attractive levels, well, high levels in as far as their share price is concerned. But yeah, probably a little bit of caution coming into those results because, as I said, margins are relatively skinny at this point in time. I don't think we're going to see too much of an impact on bad and doubtful debts or issues there because we've still got very strong employment across the country. But as you said, those rising interest rates and the slight softening of property prices, could well feed into the commentary that the bank management have as far as their outlook is concerned. So I think it'll probably be a very close watch on the outlook of those banks next week.
And resources, the other major sector, of course. Look, copper remaining positive. Iron ore, though, that's been under quite a bit of pressure. Yet, I mean, you look at stocks such as BHP, Rio Fortescue, they're still maintaining the strength of their stock.
Yeah, they are, but certainly a few signs that, as you said, that iron ore price has come off quite a bit to the 13-month low at the moment. So, yeah, some of those expectations for strong iron ore prices are subsiding. We've also seen a little bit of commentary or economic stats that have come out of the China indicating that their economy is looking at slowing and certainly their PMI numbers are a little bit weaker. So yeah, a few concerns there about the iron ore trade. We'll also probably see energy stocks off quite a bit today because the oil price was off overnight due to the potential deal on the Strait of Hormuz. So yeah, probably we could see a bit of weakness in those resource stocks today, and favouring the more industrial and tech stocks.